What happens when a Trump steps into crypto with billions behind him? Donald Trump Jr. is making headlines, and this time it's not about politics. His company, Trump Media and Technology Group, just announced plans to raise a whopping $3 billion to invest in cryptocurrencies. That's $2 billion from equity, which means selling shares of the company, and $1 billion through bonds, which are essentially high-level IOUs that investors can cash in later. This isn't just a casual move, it's a massive investment strategy designed to reshape how traditional money flows into digital assets like Bitcoin. And when someone with a name as loud as Trump throws billions toward crypto, that changes the game. Next up, what is equity and why do billionaires raise it? What do billionaires really mean when they say they're raising equity? Raising equity is just a fancy way of saying they're selling part of their company. Investors buy in, and in return, they get shares, meaning they now own a slice of the action. If the company does well, their investment grows. If not, well, that's the risk. So when Trump Jr. raises $2 billion in equity, he's essentially offering ownership in his media company in exchange for capital. That money, it's headed straight for crypto investments, Bitcoin, altcoins, you name it. If the crypto market performs well, and it will, the investors will profit. If it crashes, those shares take a hit. But here's the big picture. Powerful investors throwing down billions on Bitcoin sends a signal. They are betting the future is digital. Up next, what's the strategic Bitcoin reserve everyone's whispering about? Is the US government secretly stocking Bitcoin? Yep. In 2025, the US launched something brand new, the Strategic Bitcoin Reserve. It's a federally managed stash of Bitcoin, sourced from assets seized in legal crackdowns. Basically, when someone commits a crime involving crypto and gets caught, the government can confiscate those funds. A prime example, the infamous Silk Road case. Back in 2020, the DOJ seized over $1 billion worth of Bitcoin tied to the black market site. That Bitcoin had been sitting untouched since 2013 until a hacker moved it and got it tracked down. Now, those coins are no longer just evidence, they are a part of America's economic contingency plan. Think of it like a modern day gold reserve, but for the digital age. Stick around. Next, we're talking about the digital asset stockpile. Bitcoin isn't the only crypto the US is collecting, there's more. Alongside the strategic Bitcoin reserve, the US created another tool, the digital asset stockpile. This includes other seized cryptocurrencies like Ethereum, stablecoins, and altcoins collected through legal forfeitures. It's managed by the Treasury Department and designed as a strategic buffer. If our financial systems ever falter or fiat value fluctuates, this crypto reserve can serve as a backup asset class, like a modern safety net. The message is clear. Crypto isn't just tolerated anymore, it's being institutionalized. Whether for power plays or protection, it is now part of our national strategy. Next, could all this make Bitcoin prices soar? Big money moves, government stockpiles. So, will Bitcoin go up? When institutional players like the US government and billionaires start accumulating Bitcoin, they tighten supply. At the same time, interest from everyday traders often grows too. That combo of demand going up while the supply goes down? Classic price pressure move. If this trend continues, Bitcoin could see long term price gains, especially if supply keeps shrinking due to halvings or hoarding. But crypto is never a guaranteed bet. Sudden regulation, security issues, or public panic can reverse momentum overnight. Still, major moves like Trump Jr.'s $3 billion play and Federal Reserves send one clear message: Bitcoin is being taken seriously at the highest levels. Follow for more intel, decoded, decrypted, delivered, and subscribe if you want to stay ahead of every headline that moves the market.